Folks, you better get ready. We are heading into an unprecedented situation in markets, and that means unprecedented opportunity for those who can play these volatile times correctly. And we're going to do our best to get you on the front page here. And then we're going to go on to one specific ticker that is incredibly underpriced for the current environment, starting to gain momentum, and one that I believe can easily 5 to 10x over the coming days and weeks. Now, this is a very specific type of play and a specific type of strategy that I'm going to preach for this stock, but I am going to lay out my case for you and let you be the judge. But you do got to keep in mind that we're currently in a geopolitical and overall market situation that is unprecedented, and in unprecedented conditions, you get unprecedented opportunities. And so I highly recommend that you watch this video in its entirety so that you are prepared for the coming weeks. And as always, if you appreciate all the work that goes into making a video like this, the only thing I ask in return is that you hit that like button, and also don't forget to subscribe. Remember, every time you do those things, YouTube goes and pushes this video out to more folks, and it helps us out tremendously. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. So our MP Materials play is absolutely exploding, new highs of $39.10 as of yesterday's session. Now, in the last video from Sunday, we explained how they are uniquely positioned to benefit from being the only rare earth mining and processing facility in the US, and they just keep hitting newer and higher cycle highs. We're very patient at ZipTrader. We don't need immediate runners, but when we do get them, I'm not complaining. Take a look at our MP calls that we alerted for Discord members on Sunday night. In the Discord that night, we alerted 40 strike calls expiring September 19th, and they went from opening prices at $196 Monday morning to $390 at highs on that Monday session, and then yesterday they hit $5.80. That's almost a triple in a very, very short amount of time. This is exactly why we preach options, because you can leverage your capital very, very quickly. Now, at the same time, that's a double-edged sword, because guess what? Just like you can leverage your capital, you can also leverage your losses if you're wrong. And that's why risk management is so important. But bigger picture, right now we are in the middle of more and more geopolitical chaos, and so companies that can service demand here in the US, especially in the rare earth segment, will continue to do well, and this is really the only legitimate player in the United States. But that said, yes, expect this one to breathe, but overall I see this continuing to go up through the end of the year. Okay, next, oil. So the biggest theme you will see play out over the coming weeks is the oil shock that will be caused by this Middle East crisis. And on the 12th, we predicted this. The very night Israel sent the original missiles into Iran, we alerted UCO $30 strike calls expiring July 18th, 2025 to our Discord members. UCO is a leveraged ETF that tracks oil prices. We alerted calls on these, further leveraging UCO's moves, which means that as oil prices go up, well, UCO gets leveraged, and then those calls get leveraged, so those who bought the calls can get a lot of bang for their buck. And those calls opened Friday morning at approximately 73 cents, and as of yesterday, they made new highs at $3.20. More than a 4x, but I continue to see oil prices going up. And thus, while UCO can have its down days, I continue to see it trending up on a week over week, even quarter over quarter basis. This Middle East crisis is going to get worse before it gets better, and even if it got better and everything just settled down forever, well, there's already been enough damage to cause oil prices to go up for at least the foreseeable future. But I unfortunately think that we're going to have more escalation. I think it's going to get even worse, and thus I think that UCO calls and UCO specifically are going to go up a lot. No one knows how far a crisis can escalate, but I think it's pretty obvious that things aren't getting better yet. So I continue to stand by the UCO calls, and I will likely alert further expiry calls on top of them. Okay, next I want to talk about the QUBT play. So QUBT calls I alerted on June 5th at approximately $1.91. They ran to $7.78 at highs in Monday's session. My personal take is QUBT, it's time to lock in some profit. I think it's best if you lock in some profits, and then as things settle down a little bit more, buy some farther expiry calls, maybe slightly higher strike prices. Next, MU. So MU has been rocketing. I think this is one of the biggest bread and butter chip plays out there. And back on April 17th, we alerted $105 strike calls expiring August 15th, 2025. This gave MU most of the remainder of what was then spring and then now summer to recover from the tariff crash. And those are way ahead of schedule. And I want to give a big congratulations on that for folks who played some of that move. This is one of our best performing calls. And this went from alert price at $1.08 to about $22.27 at highs as of yesterday's session. Now, let's be real for a second. If you look closely, when we alerted these MU calls, they didn't go straight up. No, they didn't. They sold off around 20% down to 80 cents at the time. So we were wrong for a few sessions, right? And this is a very important thing to note. We can't predict exactly what's going to happen, but we can say, hey, this stock is undervalued, or hey, this stock has short-term momentum based on X, Y, Z. And in this case, if you had bought and you just said, oh, I have no strategy here, and then it's down 20%, well, you lost 20%. But if you had held, guess what? 20x. Markets will always be volatile. You'll never be able to predict the emotions of the masses. But hell, if you can predict the overall value of something underlying, and you could say something is undervalued or overvalued, and you can gauge momentum, well, guess what? You might just be able to come out ahead. But Charlie, wait a second. How do you even pick options? I don't understand, Charlito. I understand you're looking for a rallyito, but how do you find options to pick? Well, here's my no-nonsense guide to options. Step 1, identify high-conviction stocks and or setups with obvious upside. Step 2, analyze current setup and pick strategy. If flat, wait on the sidelines. If in good deal range, buy long-dated calls. If in momentum cycle, buy shorter-dated calls. Step 3, lock in profits or cut losses quickly if wrong. Obviously, there's more nuance to each of these points, but that's the bigger picture strategy. Don't overcomplicate things. Now, if you'd like to join us in the Discord to get all of our future alerts, I'll put the link to that down below. But keep in mind, while we've had a lot of top winners in this current market environment, these aren't everyday typical results. Trading is hard and risky. We want people to join us that are specifically looking to learn, do the work, think for themselves, and use us as a tool, not to just blindly copy us. If that sounds like something you'd be interested in, we'd love to have you on the team. First link down below. Okay, now it's time for the main entree. So one specific stock that I believe is set to go up substantially in the coming weeks is VIX, and really it's leveraged tracker UVXY. You need to first understand the geopolitical situation that we are in right now. Things are moving fast in the Middle East, as you know, and I believe that markets are really sleeping on the geopolitical rabbit hole that we are heading into with this Israeli-Iran crisis. Now, I'm not trying to fearmonger and say stocks are going down 50-60%, but what I am trying to say is that volatility and hedging is going to increase in coming weeks. That's a very reasonable projection, and all the evidence suggests that we're undervalued for that trajectory. It's not like this crisis is a small storm. This is a hurricane level event that could easily spiral from a 3 to a 4 to a 5 hurricane real fast. And odds of a US military action against Iran before July, as shown here by Polymarket, are at 64% and solidly and quickly trending up. We have a lot of our service members moving closer and closer into the Middle East, but if the US decides to strike, well, the entire region is going to get even further destabilized as Iran and proxies strike at US and other potential ally bases. And then for the next 6 months, we're going to be hearing about casualties, further escalation, and perhaps more and more players getting involved. And there's already enough geopolitical conflicts around the world anyways. This is going to make things so much worse and so much more tense. And it might not even be avoidable. I'm not saying it is avoidable. Pretty clear that if the US does decide to strike, it's going to be a massive escalation. From a financial perspective, though, from a stock market perspective, every time there's a major escalation, you're going to get destabilization in markets and you're going to get people rushing to hedge. And what I'm trying to say here is that markets simply aren't pricing in much escalation at all. And escalation in one form or the other, again, seems inevitable. If you look at the VIX chart right now, an index that measures this hedging and this fear and volatility, well, we've barely budged. Look at what happened during the tariff crisis fear earlier this year. It went from $16 to $60 in a few weeks. Look at what happened just last year in August last year, $17 to $65 on just a bit of financial destabilization internationally. But now we're all the way down here in the low 20s. It's hard to believe that we are going to move out of this crisis without another pop of the VIX, and I actually think we're probably going to see a pop tomorrow and then throughout the next week's session. Geopolitical events like these tend to trigger massive waves of market panic, hedging activity, and sharp, sudden movements. But VIX is still underpriced in any kind of movement. So I'm thinking, sure, we might see some rolling sell-offs, but overall, bigger picture here, what are we looking at? We're looking at day-to-day new headlines coming out, signaling potential escalations that will cause many people to rush to hedge, which means that VIX at these prices is probably close to a bottom. So how does one play it for the next upswing? Well, we alerted VIX calls for Discord members the literal night that Israel sent the missiles into Iran. But if you're watching this now, I would suggest looking into a more aggressive way to play the movement. UVXY, which is a leveraged ETF for the VIX, well, UVXY, I see breaking 3 critical levels before this crisis is over, and you gotta watch these levels very carefully because they're going to build the conviction for the overall play. The first level to break is the $25 resistance. Then once that is plowed through, the $33 resistance, and then $40. And once you've built that conviction and we've stayed there for a few days, there's a solid chance that you break that $57.50 high, depending on whether or not Trump does initiate direct strikes. And you could blow through these levels very, very quickly, like nothing, if we do get very, very significant escalation, specifically again from the US. Now, without that, or with some sort of more targeted approach that doesn't scream insane escalation, I still see you going well into the $25, $30, $40 region. So that's why, again, I think that no matter what the president decides, you're still underpricing the VIX, and thus UVXY, which leverages the VIX. Very, very good opportunity. Now, what are other ways to play this Middle East crisis? Well, again, we talked earlier about UCO. UCO is great for buying dip. UCO is, again, a leveraged ETF designed to give you amplified exposure to crude oil price movements when oil prices spike due to Middle Eastern turmoil, like we're seeing now. Well, UCO tends to move aggressively higher. There's also the big opportunity to buy geopolitically protected domestic companies, like example, MP Materials. That's why all of a sudden we've gotten super into talking about that stock, because guess what? Companies insulated from international disruptions become significantly more attractive during these geopolitical times. And if we do end up seeing a broader market cool off, well, buying good assets at good prices, just like we screamed during the tariff flows, is going to be another opportunity. Now, again, we're yet to see how far this escalation goes, so I'm not calling for a major market crash yet. I'm just saying the VIX is very underpriced. However, we'll continue to keep you updated, and if you're in the Discord, continue to check the alerts, because we alert our favorite options plays there well before we ever talk about it on YouTube. And if you want to get all the information first, well, we send everything out there first, because it's minute by minute. I can easily write up on my phone or on the computer a big Discord message, whereas on YouTube, I got to make a 10-minute video explaining everything, and then it goes through the editing process and everything like that. So much, much faster if you are on that Discord. So first link down below if you want to join us. But anywho, have a great rest of your day. Let us know how you're playing this market condition down below, and we will see you in the next video.